On today's video, we are going to be talking about supply and demand. It's a very important and a very effective concept if you know how to make use of it. I'm going to explain supply and demand for you that you can make use of this strategy to get yourself profitable this year. So, if you've been struggling with trading, I urge you to get profitable this year. Whatever it takes for you to get profitable this year, put in your best and get profitable this year. And I'm going to be dropping content this year back to back to assist the community in providing them with valuable content. So let's talk about supply and demand. What's supply and demand? Now, you see, when we have a market, when we have, whether you're trading stock, whether you're trading cryptos, whether you're trading the forex market, there are two things we want to see in the market. We want to either expect, we are speculators, right? So we speculate the market to either go from point 0 to point 10. That's why buying up or we are selling down. Now, you need to have a basic understanding of market structure. I have a video on the channel so you can go with it, but I'll just give you a brief explanation. Now, the basic market structure we know is that structure market do up and down, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and we have an uptrending market. And for a downtrending market, we have a series of lower lows and lower highs. Now, this is just the basics. This is just the basic. Don't expect to go to your chart and see these charts forming this way. It won't do like this. This is what you should just have in mind. So before we go to the chart, we're going to do some textbook example. Let me explain supply and demand for you. Now, when we have a break in market structure, a expansion to the upside on a bullish market, if we have an expansion to the upside, this is considered to be a break in market structure. This is considered to be a break in market structure here. And ideally, we expect for the market to come all the way down and continue going in that initial direction. Now, in this case, we have our demand zone, the last candlestick that was here. We have our demand zone at this point here. Our demand zone is lying down at this point, the last candlestick before the big expansion. So let me take this out. So the last candlestick before we had that big expansion is our demand zone. And ideally, we don't expect the market to go below our demand zone. So we expect the market to come to our demand zone, respect this demand zone, and slide up from there. Now, this is what is expected of the market to continue on an uptrending market. This zone is called the demand zone. The other block that created that push is called the demand zone. Let me quickly write it out. Okay, demand zone. Demand zone. Some people also call the zone a point of interest. I love to keep it very simple. You can call it demand zone. You can also call it point of interest, which is the POI. Now, this is a zone. This is a zone where you pay attention to and you want to take action from there. Now, something you should understand about demand and supply zone is that most times, if we have a very bullish market, the price would not retrace to this demand zone. So what if the market is very bullish, we'll just come to the 50% zone and go back up. In this point, your demand zone here is no longer valid because we now have a new demand zone. So this would be our new demand zone. This would be our new validated demand zone. So the market is very fractal and you just want to keep going. You just want to change. As the market changes bias, you also want to change bias with it. As the market change bias, you also want to change bias with it. You don't stick to an idea for long when trading. If the market change bias, also change bias with it. So in this point now, when we have a change of bias, what are you expecting the market to do? If we have a very valid retracement, you are expecting this point to hold. Now, you don't just go into the market when we have a retracement that gets to your demand zone. What do you want to watch for? At this point here, you want to go to your lower time frame and you watch for move. You want to watch for buying pressure around your demand zone for you to take a entry to continue riding in that initial direction. And that is how you just work with demand zone. Now, one thing you should take note of when trading supply and demand or point of interest is that we call it point of interest, we call it demand zone. The reason we call it this is because it's a zone. It's a zone, and anything can happen in that zone. We trade with probabilities here. So when the price comes to that zone, we expect the price not to go below that zone. We expect the price not to go below that zone. But mind you, at this point, we can have a sweep. So the price could sweep here, we could have a candle close here. If we are to have a candle close here, we want another candle to close above it immediately. Let me give you an illustration. So let's say we have this retracing market come over to our demand zone here, and this is a bearish market. It beats below. Let me give this a color. Okay. Let me make it more darker. Now, if we have a bearish market, a bearish candlestick come below our demand zone. Now, you don't just take entries on your demand zone here, you wait for additional confirmations. Now, if another candlestick close below it this way, your demand zone is now invalid. Your demand zone is invalid. You don't have any business trying to buy long again from that point because it's invalidated. A candlestick, a complete candlestick has closed above your demand zone. But if in a scenario where we have a bearish move below your demand zone, you want to see, for you to still validate the zone, you want to see another bullish move immediately close above it. You want to see another bullish move immediately close above it. Let me change this to green. You want to see another bullish move immediately close above it for you to validate this zone and go to your lower time frame and look for buying opportunities. That is how to trade your demand zone. This is the best explanation you can get. This is just it when it comes to supply and demand zone trading. Now, if you go to your lower time frame, let's say you saw this on the 1 hour and you go to your lower time frame, what are you expecting? Now, you're just expecting for a switch in structure. You're expecting a switch in structure on the lower time frame, and boom, you have your entry, and you just fly the trade. You just take that trade and you fly the trade to the upside, because definitely it will still come up for this liquidity to continue its initial bias, to continue the initial direction in which it was going. And the same thing is true for supply. Now, this is a clear example of demand zone. Another thing you can watch out for in your demand area is that you can have something like this. It's still very valid. You can have something like this. It's still very valid. When you have that retracement and a wick just close below it, very valid. In fact, I love when we have a wick close. When you have a wick just sweep liquidity at that point and close, your demand zone is still very valid in this case. Your demand zone is still very much valid in this case when we just have a sweep of that zone below your demand zone and the price push up from there. Then you go to your lower time frame and you look for entries. That is just how to trade demand zone. Now let's give you an illustration of your supply zone here. Now the supply zone is when you are selling, when the market is selling. Now the understanding of market structure is very important for you to ride along with this. Now we have a selling market. In this case, where's your demand, where's your supply zone? Your supply zone is the last candlestick. Some people call it order block, the last candlestick before the push. Your last candlestick over here before the push. Your last candlestick before the push. Let me take this out. Your last candlestick before the push. So this is your supply zone. Let me write that down. Supply zone. Supply zone. So we have this point to be your supply zone. You can still call it point of interest. Supply zone, point of interest, it's almost the same thing. This is an area, this is a point of interest. You are looking forward for something to happen in the market. You are looking forward for the market to retrace to that point. Mind you, at this your supply zone, you can either get a sweep or a close and a bounce immediately from that zone. Then you go to the lower time frame and look for entries. And mind you, again, something you should know is that you don't just place your buyers on that support zone. If the market is very bearish, the market would not retrace to that zone, and it's fine. The market will do something like this, and you just immediately change your buyers. Now, this would be your supply zone. This would be your supply zone. You don't have to get a trade each and every day. You just have to stick to what you know that works in the market. Now, this would be your supply zone over here. And what are you expecting? Either a sweep or candlestick close and bounce back immediately. Then you look for your entry and you keep riding in the initial direction. That is just how to trade supply and demand zone. So let's just do a quick chart example. This video is getting long already, but let's just do a quick chart example here. So I'll show you how it works in the real chart. Let's see. And mind you, it works in every time frame. It works in every time frame, no matter what time frame. Now I caught this trade using the same concept, and I'm going to show you that it works a lot. Now, as you can see, I did not just base my bias. Now you saw that the market gave us 1, 2. We had the supplies, we had a demand zone here, we had a break to this point, we had a reversal. I changed my bias. I will not sink and die with my bias. I changed my bias immediately. We had another break. At this point here, now you can see that the market came back and respected my demand zone before it went back up. And I will show you hundreds of examples where the market would always respect your demand zones or your supply zones. This is one of it. This is one of it. If we go to the higher time frame, let me show you a very good example on the higher time frame again. Now, what do you notice here? So this happened here. We had the market gave us 1 push, 2 push, and this. Now this was a very big move. This here was our supply zone. This was our demand zone. I mean, we have a demand zone here because from that point we have a very big push. We have a very big push. Let me use some other pair as example, not to get you confused. Let's use Jasmine. Now, if you take a good look at this pair here, let me come to the 1 hour so we have something to work with. Now, on the 1 hour candlestick, what do you notice here? We had market structure, higher highs, higher lows, higher highs. In this case, where is your demand zone? The other blocks here, these points here are your demand zone. This here is your demand zone. This here is your demand zone. And I told you, you might have a sweep. You might have a sweep in your demand zone, but the concept still remains the same. Now, this is on the 1 hour. Once you see that your chart has arrived to your demand zone at this point here, you can just go to the 5 minutes or so and just look for entry around that point. You look for big entry around that point. Yeah. You look for entry around the demand zone because you already know what you're looking for. You just look for a reasonable entry around here. This is where we had that shift, and you can just place your stop loss below and you ride your trade all the way up. That's if you don't want to take the entry on the higher time frame. You ride the way up, all the way up. Simple as that. Let me give you some other examples so you see that it works on every chart. On every chart, the same concept. It works. Supply and demand zone, it works. It works. So for this zone here, you can see we had a supply zone lying down here. If I'm to look for any buying opportunity, I will wait for this market to bounce back down to my supply zone. And now that the market is selling, I don't just want to wait as a day trader. I don't just want to wait for so long. So what are the things I can do if I come to the 5 minute time frame to just take quick entry? Now, if you see from this point, let me give you supply zones that has already played out. Now from here we had a push to the side, we had this. In this point where is our supply zone here, you can see it playing out over here again. Where's our supply zone? The last candlestick. And you could have just write this all the way down. We just write this all the way down. Where's your short two? You don't need much confirmation because you're on the 5 minutes already. You just want to give your supply zone some space. And you already write this all the way down to this point. Easy as that. That's just how to trade supply and demand. That's just how to trade supply and demand. Nothing complicated about supply and demand. That is just it. That is just the basic concept behind supply and demand zone. And if I can go through a lot of charts for you, and you just see that this concept plays out over and over again. Let's look at this one here. From this point, this is where we had the push here. So if you pay very close attention, from where we had this push here, this was our demand zone. Went up, came back to the demand zone and respected it, respected the demand zone and went back up. Easy, simple as that. You can decide to hold it all the way to the upside and the price will still get there. So that is just it, guys. Make sure you subscribe to the channel for more educative content.